Welcome back. Hope you're having a fantastic day. And we are going to take a look at the markets and Bitcoin, as the traditional markets have put in the second green week in a row. Bitcoin is working on its second green week in a row, and mortgage rates are hitting all-time highs. So let's take a look at what is going on. And let's start out with Bitcoin. This is the hourly chart of Bitcoin. And as you can see, since that local landing on March 14th, it's been kind of uphill ever since, kind of somewhat respecting a bit of a trend line here on its way up. Not quite, let me pull it over here, not quite perfect. And, again, I am no technical analyst, but I do use the charts to kind of track price action, kind of look at the trends, verify the thoughts that I'm looking at for stocks and for cryptos that I'm investing in. I cleared all of my stock trades out today. I do not like to go into the weekends right now with the war situation. I don't like to carry risk into the weekend, just so much uncertainty out there. So I did exit all my trades, and I am up for the week once again, waiting for the weekend. I might make a trade over the weekend in crypto if something looks interesting. So got my eye on a few things there. We'll see how that shakes out. But right now, waiting to see how this all plays out. And as I said, Bitcoin is working on its second week in a row on the upward trend. So we'll have to wait and see if that plays out and what the continuation looks like. Let's take a look at the daily. And we've been tracking a couple of trends here. Again, we have, I like to use the closes. So we have the rising range right here on the bottom of this trend that price has been respecting. And it's been putting in higher lows on this area here. We're putting in consistent higher lows, but the problem is Bitcoin is still putting in lower highs right now, and that is not good. You want higher highs in order to get confirmation of some sort of a trend reversal. So let's see how this plays out. We've been kind of tracking this little trend here. And again, I like to use the closes. We'll look at it on the wicks here in a minute and see what happened. And Bitcoin did right now, obviously the close, if you mark it this way on these two highs here, again, that's a lower high. It's kind of a downward trend, and Bitcoin did not close, or has not closed above this upward trend line. But if you correct this a little bit, let's just say you pull it all the way back to this one here, and you make it more representative of that range like this here, then you get a little bit different picture of where price rejected and what this could potentially look like. So you had these two highs here that were pretty much equal. This one's a little bit lower, and price rejected right there. So there seems to be serious resistance at that 44.5 level, like we were talking about all week. We've been looking at that 44.5, 44.6. So we really need to get to 46,000. You need to close above 46,000. So what you're looking for is for price to kind of dance along in here like this, kind of work its way out, break out, back check, and then kind of continue on for there. That's when you know you have a reversal, if price does something like that. And it could break out of here at any time and can kind of continue on. Doesn't have to be at the end of this. A lot of times these patterns will consolidate. Again, I'm not a technical analyst, but I do watch these things, and I watch other people's technical analysis, the experts, to kind of form my opinions. And then I chart the price action, look at the trends, obviously, to try to determine the best guess, because really at the end of the day, you're looking at probabilities and the potential for price to move one way or the other. And of course, if something happens, it could just break right through here, come back, test, and then just kind of reject down there as well. So a lot of different scenarios on the table there. And let's take a look at the moving averages here, just to kind of see what we've got going on and see where we're at. I know we're playing around with that 50-day moving average. This one's got a ton of them here. That's not what I'm looking for there. I am looking for the simple moving averages. And I don't want that many of them. 50, 100, 200 is what I'm looking for here. And 50, 100, 200. So price right now on the daily bounced off of the 50. So price is above 50, and that's what you want to see, because anytime price goes below the 50, it breaks down and checks that 200-day moving average, which right now, the 200-day is the purple line right here. So still below 200, checking the 100. So right now, price is above the 100 and the 50. So we'll have to see if it continues in that direction. And if you look at the weekly, still rejecting on that 50 on the weekly. And that's the big one. So we've looked at the history of Bitcoin. The yellow line on this chart is the 50-day moving average, 100 below it, 200 at the bottom. Whenever price loses a 50-day, it always goes down and checks that 200-week. And this is the weekly chart. So 50-week moving average, it goes down and checks that 200-week. So right now it's finding support, still finding support on the 100, rejecting off the 50. So we'll have to see if price can get above that 50-week moving average to try to confirm some sort of an uptrend. And until we get there, all we can do is watch it. Weekends can be a little tricky, but they haven't been bad. I know a lot of people say weekends are the most manipulated and price does a lot of crazy things on weekends, but we haven't really seen that play out in recent history. It seems like the weekends have been relatively calm. And if we just go back to the 18th, which is in this range right here, this area here was last weekend, basically. So price pumped a little bit and dropped a little bit. Prior to that was the 11th of March. And I think we looked at that, this 11th, 12th, 13th, kind of like in this range. So price is moving more during the week than it is on the weekends. It just consolidates a little bit on the weekends. So what it looks like price has really been doing here is basically, let's take it off a log scale here, kind of consolidating in this range overall and retracing this kind of whole overall range right here that it's been in for several months. So it's been in this range on the initial drop since January. So we've been in this range for 3 months now, getting ready to go on 4 months. So price has just kind of been bouncing around there, retracing, trying to figure out what it's going to do. And that $45,000 level is a big, big level of resistance that price just doesn't seem to be able to get through. So I feel like we're probably going to roll over and test this lower region again. So the question is, where's that test going to come in? We had a wick low here of 33, wick low there of 34. So maybe we get a wick low of 35 and then price continues from there. So we'll see if that pattern kind of holds up in terms of a back check here of a low and then continues on from there. And then kind of continues to maybe, let's look at this 4-hourly here. You can kind of see the 4-hourly, how price is kind of playing out. Little different look here with a more gradual rise all week long here versus these spikes up and down. So maybe price could be trying to do a little bit more of a casual continuation here and just kind of continue its way on up into more of a retracement level there that we've been looking for versus that instant Fibonacci retracement that we were trying to find. Maybe it could be a slower retracement. That puts it right back to that 618. How do you like that? I hit it right on the head there. And then maybe it gets into this area and then kind of does a little bit of this and then rolls over into more of a longer consolidation if past history proves itself moving forward. So that's a couple of things I'm looking at. And again, if you look at it on the 4-hour, you kind of have this somewhat of a rising pattern. And if you take the wicks, you get a little different look on the wicks here, like that. And then you can take the wicks here and ride it up that way. Not completely different, but a little bit different kind of look to this pattern here. So it could be an even bigger range that price, if it wants to consolidate, continues to consolidate before it breaks out or does something at the end of that. And I feel like the longer this consolidates without a breakout, I think possibly the more potential there may be for a rollover. If you just can't, with all the momentum, all of the fundamentals, everything that's happening out there, if price can't break through this level and continue up anytime soon, then I just don't think that's a good sign, because there is a lot of good news out there. If we look at the news today, the markets ended up basically flat today, but up for the week. The NASDAQ was down about 0.16, S&P 0.51, Dow 0.44. Surprised me. I thought we'd have a red day because price has been back and forth each week. or each day, although we've had a couple of up days this week. That's been kind of going back and forth with up and down days, with the markets trying to digest everything that's going on. So interesting times out there. The big news are mortgage rates closing in on that 5% mark. I've said for a long time that if mortgage rates hit 5%, that's a threshold that's going to really put a damper on the housing market. And we're already seeing it, that the 30-year fixed rate mortgage is already at 4.95%. That's a huge mental threshold, and it's already having an effect on pending sales. Pending sales are down 14%. It's already affecting mortgage refinance applications, mortgage applications. And the other thing that's interesting is the home builders. So we talked about that the other day. There are a ton of housing units in the pipeline. And if rates continue to rise, a lot of contracts are going to fall out of people that contracted to build a house right now, and, or 6 months ago or whatever, and it takes a year, 18 months to build a house, 12, 14, 16, whatever it is, may not be able to afford that house when it's done. So the builders are going to be sitting on some inventory, and they are the ones that can dump housing stock the quickest at lower prices in order to get those houses off the books, because they're making their money on a lot of other ancillary products with the insurances and financing and title company and things like that. So big home builders that have a lot of housing inventory, if they don't have sales and things slow down, they will mark houses down and dump them to get that inventory off the books. And they can discount, 20 to 30% and still be okay and still get out at a break even. It's the resale market that takes a lot longer for prices to adjust. So if rates continue to move up as we get towards the end of the year, you're going to see the housing market start to change. We do have, serious demand, lack of supply, but you will see inventory levels. We're already starting to see inventory levels start to increase, days on market starting to increase, less competition for the homes in some areas. Now, the Sun Belt is still experiencing a lot of pressure and a lot of competition for houses. So the housing market is still pretty hot in those areas, red hot in the Sun Belt, no pun intended there. So we'll just have to keep an eye on that, see how that develops. And as far as the news in the cryptocurrency space, it is continuing to get better and better every single day. There's more news of encouragement and bullishness for the entire space of crypto. We've also seen the latest hiring. Jefferies executives leave to create a startup. So traditional finance bankers are leaving traditional finance and moving into the crypto space and starting financial services companies to offer to clients, because more and more people are interested in crypto. I get phone calls all the time from my network of people wanting me to start a crypto fund. I'm not doing it, but I would rather sell the shovels than move the gold for somebody. So if I were to do anything in the space, it would probably be something like an exchange or some sort of a service or a product for investors to use. I do not want to manage a fund at this point in my life, especially in crypto, as volatile as it is. But a lot of talent. Remember, I said the opportunities are where the capital flows to and where the talent goes to. So watch the talent leaving traditional finance, traditional tech, heading into the crypto space. Look at the companies they're going to work with, the types of projects they're going to work on. Web3 is a big buzzword out there. A lot of talent going into the Web3 community and a lot of capital going into that community. And then also financial services to trade the volatility of crypto. And some companies obviously offering custody services to set up spot products for their clients as well. So very interesting times. We got to watch mortgage rates and the housing market, see how that reacts. It's happening much faster than I thought it would in terms of the increase in interest rates. The Fed hasn't even really got started yet. They're going to meet next month, raise rates again. So we might see mortgage rates in the above 5% here pretty soon. And that's really going to put a damper on the housing market, which will be good overall for people in terms of the housing market kind of correcting. It needs to correct and things like that. So like I said, your opportunities are coming. If you've been waiting to buy a house, it'll be here before you know it. You'll have some really good opportunities in terms of the value of housing. Unfortunately, interest rates are up, so it's going to be it's going to affect affordability, but it's kind of 6 of one, half a dozen of the other. Price comes down, interest rates go up a little bit versus prices being up now, interest rates down. So it'll be interesting to see how that impacts things and to see how people feel about the value of their properties once the housing market corrects. I've seen it before, been through it 2008 and 9. I went through it before that in the 90s, early 90s. So I've seen a couple of housing market corrections, and it takes a little bit of time for it to play out, but it does happen. Everything works in cycles, peaks and valleys, and you just need to understand them and work with them. And when you make your investments. So those are the things I'm looking at. I will see you on the next video.